So the average expense ratio with Morningstar in the U.S. equity that could potentially be inside your portfolio is 1.28%. And this is amongst domestic equity, U.S. large value, U.S. small, and U.S. small value. The average is 1.28. Inside our DFA is 0.96. And I want to show you where the rubber meets the road. If we look at U.S. equity turnover ratio, so this is how much they're buying and selling inside your portfolio if you're using active management, the average turnover is 69% in U.S. equity inside your portfolio. With DFA is 16%, only 16% for turnover ratio. That's buying and selling inside the portfolio, trading. That includes the bid and ask, and we'll talk a little bit about that a little later and how that can drag on your portfolio. And let's look at the average holding now for U.S. equity inside the average inside your portfolio. With U.S. equity holdings, Morningstar's average is 1,032. With our DFA is 6,229. Now, where this counts is in a market like 2008 or 2001. If you're too heavily weighted in one market, you can see the average Morningstar, and potentially this could be your portfolio. You could be overly weighted in a certain sector, and we've been on this bull run for a while now, so I think it's really important that you come in and have your portfolio reviewed for free. Generally, we charge $500, but because you're calling from this radio show, we're going to waive that fee. Come in and get your free review and give us a call, 941-925-2121. We're in St. Pete, Tampa, Sarasota, Bradenton, Venice. Get that free review. All right, let's look at international now, the international equity fund market. And with DFA, we hold 11 distinct asset classes in 40-plus countries. And again, we're heavily towards small and value because that's where the returns are. And let's look at the expense ratio and for international. Now, it's more expensive to be abroad, as we all know. So Morningstar's average expense ratio is 1.44%. And with DFA, with our DFA, it's 1.17. Now, let's go where the rubber meets the road. And the turnover for international equity, the average Morningstar is 56%. So this is how much they're buying and selling on the international equity market. And with DFA, with our DFA, is only 17%. So you can see there's a huge difference. And let's look at our holding, how many holdings we have in the international equity market. And with the average Morningstar, so this could potentially be in your portfolio, 1,301 in DFA. Get ready for this. DFA has over 16,562. So you're globally protected from a correction in the market. You're not overly weighted in one area. And again, we're getting rid of the dogs and picking the Mercedes inside this fund. So we're not holding bad companies, but we're not trying to pick stocks, and we're not trying to time the market. You can hear some of these guys on the weekday shows trying to time the market and use options and trying to guess when the market's going to correct, when there's going to be a swing. That's not what we're doing. That's risky. We're holding the market, staying true to the course, and lowering the internal costs on your portfolio and the risks, and giving you empirical returns with an academic approach, and Nobel Prize winning economists backing this philosophy. And so again, give us a call, 941-925-2121. Get your portfolio reviewed and see what the internal cost on your portfolio is. I mentioned earlier on active management, the average cost on it is about 3.25% on active management. So an active manager has to overcome that before he can even start making money inside your portfolio. I want to go to the third one now, the third asset class that I want to look at, which is fixed income. And with DFA, we hold 6 distinct asset classes on this, and we use a true diversification approach using global bonds with varying maturities. And now the expense ratio on fixed income is generally a little higher, and the average Morningstar expense ratio inside your portfolio potentially is 0.95%. With DFA, it's 0.82%. Now let's go to where the rubber meets the road on the average turnover for fixed income on your portfolio potentially. And the average Morningstar is 179% on active management. They're buying and selling inside the portfolio. And here's where Wall Street makes their money, and you're going to really get an insight to how Wall Street is earning a living. If you look at intermediate term government bonds, Wall Street's buying and selling inside the portfolio 344%. That's where Wall Street's making their money, right there. On short-term government bonds, they're turning those over 344%. That is incredible. On DFA, as compared to the average Morningstar, remember Morningstar on fixed income was 179%, and DFA is only 63%. And inside DFA, we're only holding short-term bonds because we want to be careful of long-term right now. If Janet Yellen moves interest rates, we're going to see that greatly affected. And let's look at the average holdings inside fixed income. For Morningstar, the average holding is 1,512. Intermediate is 797. So they're making a lot of money off your bond holdings in your portfolio. With DFA, it's only 544, as opposed to the average Morningstar of 1,512. So that's pretty powerful.